Hey guys, Mortgage Monday back for a continuation of the conventional conversation, right? So we have given you a bunch of tools, and now we're going to talk to you why you should look at a conventional loan. So anytime you have a credit score over 680, the MI, the mortgage insurance, is going to be far less expensive on a conventional loan than it would be on an FHA loan or other equivalent style of loan. Simply because FHA doesn't adjust their MI based upon the credit score, where conventional does. So the higher your credit score, the lower the risk, the lower the MI. So you want to start looking at conventional loans really heavy once you start getting into the 700 credit scores, because it's probably going to be a substantial savings over your MI monthly. If nothing else, the MI falls off on conventional, where it probably will not on FHA. If you got a buyer that saved 5 to 20%, and they don't need any down payment assistance, just take them conventional. That's what they wanted anyways. Just helps limit the conversation, the confusion, the crosstalk, the fact that they'll probably shop you because what you're saying to them is super confusing. So they're going to go just talk to somebody that's talking to them in a language that they already understand. So if they're putting 5 to 20% down, just stay with the conventional loan, and we'll we'll figure out how to make it work. Fixer-uppers that need specific work. We're talking about this, like pools and saunas, basketball courts, tennis courts, that have amenities to the property that FHA may not want to play ball with, that USDA will absolutely not play ball with, and that VA doesn't really have an option for, right? These loans will be there for that particular option, so you can fix those things up and repair them back to working order. Sometimes government loans want you to fill in pools, right, or take them down and destroy them, and you may not want to do that. So use this as an option. If you're under 50% back-end DTI, there's no reason to look anywhere else. Sometimes it may make sense, and it's a wonky industry time where the appetite for investors is strictly government over conventional, and that does happen. It has happened in the past. It could happen again, but it's not happening right now, right? So take a look at the conventional option as a viable option once you get under 50% DTI, because it's just an easier product. If you're doing an investment home, a second home, or using rental income on an appraisal, you probably want to look at conventional first. Path of least resistance is what I always try to go after. And conventional loans is very accepting of these types of properties and those types of borrowers. So keep that in mind when you're looking at those. And again, investment homes is, I'm not going to move into that property. I usually just want to use it for income. A second home is I live in that property a portion of the year, most of the time 6 months or longer, right? But I don't want to reside there as my principal residence. I just want to go there, right? That's a second home. And rental income is a way that you're going to be using income off the property that you're not using like boarders income, right? Because boarders income is allowed on conventional loans as long as your property is subject to allowance of the boarder's income. There's nuance to that, and we can talk about that. I don't want you to be a subject matter expert, so I'm not going to dive into this. But when you're having those types of properties, we may need to get creative. And getting creative is one way that we can on conventional. A closing cost sensitive buyer is going to have a whole lot easier time closing on conventional than FHA for one reason and one reason only: mortgage insurance premium. The mortgage insurance on FHA is very expensive. And there's nothing to frown at. There's a lot of options given to you for FHA, but if you don't need those options, then you're paying that mortgage insurance for no reason. So revert back to conventional loan, right? So that closing cost can come down for your buyer. So the sticker shock's not so bad. Buying a home for a parent or a child and you don't want to move into this. This is a very unique scenario that happens more often than you think. Parents or children need to buy homes for the children or parents because they've aged or cannot buy it for themselves. This cannot be or can be limited to age, ability to pay, capacity to pay, capacity to save, ability to show credit requirements, right? Be all sorts of reasons. Just graduated from college and don't have any income yet, trying to find a job. I know I'll find a job because I got a college degree as a doctor or nurse, so it's coming. I just haven't located the department where I'm going to work yet. I'm a lawyer, just passed the bar exam, and I'm moving over to New York because I want to be with the big boys. but I don't have a place yet. My parents are going to help me buy one. My dad, my mom, my family member has dementia, or is now retired and is on limited income, or the only other option is a reverse mortgage, and we're not ready for that yet, right? There's a lot of reasons why you may need to buy a home for a family member, but conventional offers that without you needing to move into the property. Remember, FHA has that requirement that you need to move into the property. That kind of alleviates itself here, right? A lot less headache, a lot less paperwork, path of least resistance. But anyways, guys, that's why you should do a conventional. And now there's a whole laundry list of reasons why you should do a conventional loan, right? It's a super high level overview to kind of get the wheels turning, to kind of help you develop knowledge based upon what a conventional loan is. Thank you for being here for Mortgage Mondays. We'll see you on the next video. Talk to you soon.